Hey there, future financial sharpshooters. Welcome back to the channel where we dive deep into the fascinating world of how to borrow stocks and the mechanics behind the short squeeze. Today, we're peeling back the layers on a very specific ticker that's caught our attention, and it's one you might not have heard of, LABT. That's Liquid Index Biotherapeutics, Inc. We're going to break down why this microcap biotech name is showing up on our high cost to borrow screener, what that means, and what to watch for. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. LABT logo and stock chart. Let's get straight into Liquid Index Biotherapeutics, Inc. The LABT. This company operates in the healthcare/biotechnology sector, focusing on developing antimicrobial products. They're clinical stage, which means they're still in the process of bringing their innovative bisphosphocin class of antimicrobial agents to market. As of now, LABT has a tiny market cap of just $3.09 million, firmly placing it in microcap territory, which often comes with increased volatility. Looking at the recent price action for LABT, it's been a bit of a mixed bag. Today, the stock is down 3.46%. Over the last 5 days, however, it's seen a gain of 10.40%. But stretching out to the last 30 days, LABT has dropped 34.99%. Volume-wise, today saw only 102,100 shares trade hands, which is significantly lower than its 30-day average volume of nearly 3 million shares. In fact, today's relative volume is practically Xerox average, indicating very low current interest or trading activity. What's cost to borrow and why it matters? So, why are we talking about LABT? It all comes down to something called the cost to borrow, or CTB. Imagine you want to bet against a stock, believing its price will fall. To do that, you need to borrow shares from someone who owns them, sell them, and then buy them back later at a low price to return them. The cost to borrow is the annualized fee you pay to rent those shares. When a stock is hard to borrow, it means there's high demand from short sellers and or a very limited supply of shares available to rent. This scarcity drives the CTB fee sky high, sometimes even exceeding 100% per year, as is the case with LABT. Why does this matter? Because for short sellers, a high CTB means the position is getting more expensive to maintain every single day, increasing the pressure on them to close out their short positions. Why this stock is hard to borrow right now? Display CTB percent clearly. And this is where LABT truly stands out. Our data shows Liquid Index Biotherapeutics has an eye-popping annualized cost to borrow fee of 768.7%. That's not a typo, nearly 770% per year just to hold a short position. While the exact number of shares currently available to borrow is unknown, a fee this high is a clear signal of extreme scarcity. LABT's estimated float, which is the number of shares available for public trading, is a very small 1.8 million shares. This tiny float, combined with high short interest, is a classic recipe for a stock becoming incredibly hard to borrow. Our internal composite squeeze score for LABT currently sits at 42.2 out of 100, which factors in this high CTB float size and other metrics. Squeeze mechanics explained. Visualize squeeze cycle. Let's quickly review how a short squeeze typically unfolds. Short sellers borrow shares, sell them, and wait for the price to drop. If the price starts to rise instead, they face mounting losses and, in cases like LABT, increasingly painful cost to borrow fees. This financial pressure can force them to cover their positions, meaning they have to buy back the shares they borrowed regardless of the price to return them to the lender. This sudden buying demand, especially in a stock with a small float like LABT's 1.8 million shares, can create a domino effect, pushing the price even higher and triggering more short sellers to cover. That's the essence of a short squeeze. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. One critical factor to consider when evaluating any potential squeeze candidate is dilution. Dilution happens when a company issues new shares, which increases the total number of shares outstanding. While it might bring in capital for the company, it also spreads the existing value across more shares, typically pushing the share price down. For a short squeeze, dilution can be a killer. It provides new shares for short sellers to cover with, or simply negates any upward price pressure from short covering. In the case of Liquid Index Biotherapeutics, we ran a check for recent dilutive SEC filings like SMINUS 1s, SMINUS 3s, or 424 BS. The good news for squeeze enthusiasts is that we found no recent dilutive SEC filings in the last 90 days fallout, which means the specific headwind is not currently present. Recent reverse split watch. Another important piece of context for LABT is its recent reverse stock split. On June 22, 2026, just 45 days ago, LABT executed a 1-for-10 reverse split. For those unfamiliar, a reverse split reduces the number of outstanding shares and proportionally increases the share price. So, for every 10 shares you owned, you now own 1, but its value is 10 times higher. This significantly reduces the float, making it even tighter. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the reset share price and reduced flow can attract new attention. While that is slightly past that 1-month window, this recent event is still a major factor in its current setup and potential for volatility. It's a pattern we've observed, but it is by no means a guarantee for any specific stock. Again, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So if you're keeping an eye on Lakewood Index by Therapeutics, LABT, what should you be watching for? First, continue to monitor that incredibly high cost to borrow fee. Any sustained drop could indicate a weakening squeeze thesis. Second, keep an eye on shares available to borrow. Shrinking supply signals increasing pressure. Third, and critically for LABT, given today's low volume, look for an increase in trading volume accompanied by positive price momentum. Remember, today's volume was a fraction of its average, suggesting a lack of buying interest right now. Without significant volume and sustained buying, a squeeze is unlikely to materialize, even with high CTB. Finally, always be aware of any news or clinical updates from Lakewood Index by Therapeutics themselves, as positive developments could be a catalyst. Joe LABT chart with key data point. LABT, Lakewood Index by Therapeutics, Inc. presents a unique and compelling case study in the hard-to-borrow landscape. With an astonishing 768.7% cost to borrow, a tiny 1.8 million share float, a recent reverse split, and no immediate dilution risk, it clearly has the ingredients that could contribute to a short squeeze scenario. However, its current low volume and negative price action today suggests that while the potential for short squeeze pressure exists, a catalyst or significant shift in trading dynamics would be needed to truly ignite it. This is a highly speculative microcap stock in the volatile biotech sector, so always proceed with extreme caution and thorough due diligence. If you found this breakdown valuable, smash that like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments what other tickers are on your radar. We love hearing from you. Thanks for watching, and we'll see you in the next video.